If you did 3 or 4 or even 5 interest rate hikes this year, you would be at, I don't know, 1%, 1.25%. Wouldn't you do that anyway, even if you didn't have an inflation problem? So is anything the Fed is even going to do in terms of some of the most extreme forecasts for Fed tightening, doesn't it really not address the inflation problem sufficiently?
Well, I actually think it will go a long way toward addressing inflation. We would have to move off of zero at some point anyway. And so to that extent, you're right. But I do think that our actual movements and the signal that we are really moving back to a more normal stance will have implications and impacts for the decisions that people make and how they engage with the economic markets. So I actually think that the signaling and the action are going to be material to really help get people into the mindset that we want them to, which is that inflation is going to get to where we need it to get to. Employment is going to continue to grow, and we're going to get to a very strong economy, and we're going to maintain a strong economy even as we return to a more historically normal stance for our policy.
Raphael, thanks, Steve. Raphael, something I get a little confused about is when people start talking about rate hikes. You say you're anticipating 3 to 4 rate hikes this year. Does that mean you're looking for 3 to 4 25 basis point hikes, or could some of those rate hikes be 50 basis points? I guess if you were to do it out in raw numbers, are you looking for 75 basis points to 100 basis points, or could it be quite a bit more than that if you're considering that some of them could be 50 basis point hikes?
That's a very interesting question, Becky. When I say 3 hikes, it really is at a 25 basis point increment level. When we do our SCP estimates and the dot plots, we don't actually put in numbers of hike. We actually put to what point or what level of interest rates do we think we'll get to at the end of this year. And so for me, I am thinking very much of the 25 basis point perspective, but I want everyone to understand that every option is on the table. And I don't want people to have a view that we're locked into a particular trajectory in terms of how our rates have to move over time. And we're really going to let the data show us to what extent a 50 basis point or a 25 basis point move might be appropriate. So what I would say is when I say 3, I'm saying it in the context of a dot plot discussion where that usually is 25 basis points. But I'm open to anything, and I'll let the data really lead my adaptation in terms of thinking about what's appropriate.
One more thing. You said you'd like to start shrinking the balance sheet as soon as possible. A lot of people have asked this question. Why do we still have quantitative easing at all?
Well, I think what we've been trying to do is create certainty into the markets. And we have signaled the reduction in the pace of purchases to get to a stable place. And then we're going to really try to pivot as much as possible to removing the liquidity that's in the marketplace. And I actually think we can do that without leading to considerable tightening, at least in the early phases of reducing our balance sheet. And so when we can get to that, I think we'll be in a much stronger place to continue our policies and make sure that the economy continues to grow as we move to a less accommodative stance.